Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 16th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on with some economic data. Across the pond in Great Britain, we got the unemployment rate downtick just a bit to 4.4%, was expected to come in at 4.5%. Also, average hourly earnings in Great Britain came in better than expected at 2.1%, was expected to be 1.8%, and then they revised last month's number up slightly from 1.8% to 1.9%, so better than expected on both those fronts. Also, we started getting out some flash GDP numbers from the European region, came in at 0.6%, which was in line with expectations. Here in the United States, we got building permits. Remember, I'm not a big fan of building permits. You can pull as many permits as you want, and it doesn't necessarily mean you're going to build. But this month's number came in at 1.22 million. Building permits pulled, was expected to be 1.25, although they did revise last month's number up from 1.25 to 1.28. So, having said that, on to the housing starts, which is really kind of a bit of a lagging indicator. They look at building permits as being the early number in a sense, but housing starts really tells you what they're really doing, and they started 1.16 million houses, expected to be 1.22 million units. So they're actually not building, like, despite the fact that we saw building permits go up, housing starts didn't. So that's that whole thing that I was talking about with you can pull as many permits as you want, but it doesn't necessarily mean you're going to start building. On to crude oil inventories. They came in at a big drawdown of 8.9 million barrels, was expected to be a drawdown of 3 million barrels. Last week's numbers stayed relatively, or last data point remained the same, but a big drawdown. And we're looking at crude oil right here, and it's down about 24 cents, well off the highs of the day and testing that 50 Fibonacci level. A bit surprising to me on that economic data point. For the crude oil inventories, I thought we would see a bit of a bounce to the upside, especially the way the market reacted yesterday. Not seeing that as of now, but the day is not done. Also, later on today, we get the FOMC meeting minutes. So that's going to be a lot of fodder going on for the overnight session. Also, that will be all over Twitter, I'm sure. Everybody kind of trying to read the tea leaves in the minutes. But like I said, crude oil down slightly on the day. We've got gold off on the day by about $2. Looks like it's a positive, but at the end of the day, that just has to do with where the overnight session showed up. And it is looking to try and break through that 61 fib level. I don't see that really happening. I actually see gold coming off. Economic data points are looking pretty decent right now. So bonds up 2 points on the day. You know, for all intents and purposes, unchanged, right about where it should be, because Fed is likely not going to raise rates anytime in 2017 anymore, I should say. Going to remain at probably 1.25%. So bonds priced in about where I would think that they should be, especially with the equities moving higher, as we can see here in the Dow Jones Industrial Average yesterday, looking like it could have been getting a little toppy the way the market settled. The overall push today higher kind of negates those candles that we were seeing yesterday. But Dow Jones up over 80 points right now. This is what I was talking about with the Nasdaq, up 30 points. And if we look at this, could have been looking like with this doji here that it was just a little bit toppy. And today moving higher, if we're to finish up in this area or any higher, it's going to negate that candle. It's just going to look like it's a continuation to the upside and retrace that. Same situation here with the E-mini S&Ps. Hasn't quite gone totally, I mean, it has gone above it, but it hasn't been able to sustain that. But if we are to settle up anywhere above yesterday's high, again, that candle right there is not going to look like it was as toppy as one, as a bear might have hoped, I should say. If we're looking at the E-mini S&Ps on the daily chart, you can see this move happened overnight here on that high, and we've retraced that during the day session. So that target, in a sense, has been retraced and printed. So, at the end of the day, we are very near the highs. I don't know. It's hard to tell what's going to happen right now. It just, to me, looks like we're going to start continuing in an upward trajectory in the equities. So keep that in mind. All right, on to what I've done. Philip Morris, we talked about this yesterday a couple of times. I haven't done anything. It actually kind of started getting away from me. It's still within reason on my strangle there, but I haven't done anything with that big move. I was hoping we'd get a bit of a top off maybe and a bit of a pullback after that big rally yesterday on basically no news, but hoping we can get a little bit of a pullback here and come back down to this area, which would be perfect for my strangle. I was very close to being able to get out of that one, but started getting away from me yesterday. Still profitable, but not as good as I would have normally liked to have seen. So with EA Sports, this is a trade that I covered this morning, and if you remember, I did the September, sold the 110 puts when we had that high implied volatility. Volatility is coming out of there nicely, and directionality in my favor as well. So I was able to cover that for a little bit better than 50% of my max profit with this big move today, up almost $2, and was able to cover those SEP 110 puts for 66 cents this morning. So slightly better than the 50% of my max profit. And then Facebook is right there in line with my max profit potential. I haven't covered it yet, but I'm looking at covering that trade here pretty soon. Probably cover it by the end of the day. In Facebook, I have a strangle on in there. If you remember, I have on the September sold the 150 puts and then the 185 calls for 91 cents. Right now it's trading, I believe it was trading right around 50 cents, 48 cents it looks like, which is probably the mid-market. I'm working about a 42-cent bid, but I'm going to probably ratchet that up and hopefully get out of that trade today. Volatility coming out and directionality being sideways, which is what we want in that strangle, allowing us to get out of it a little bit earlier. So we'll have to see. So trying to get out of that today. And I talked about I didn't get out of Philip Morris. That would be the last thing. The other thing I'm going to be looking at, we got earnings out of Cisco this afternoon. I'm going to be looking at that. And we've got Walmart tomorrow and ticker symbol NTAP, which I probably won't play around with. I don't know much about NetTap or NetApp, sorry, should say. Haven't really ever traded. It actually has pretty decent markets in there, but I think I'm probably going to stay away from that. But that comes out today in the afternoon. I'm going to most likely be looking at Cisco and Walmart. I'm back and forth on the Walmart trade. Don't necessarily know if I want to play around with retailers right now, but Walmart is on the docket for the morning session. NetApp has really tight markets. It's a $45 stock, has 5-cent wide bid offers. So it may be on the docket as well. But follow me on Twitter because I'll be tweeting out all those different trades, so you can know where I'm at. Remember, I'm going to be following my rules, so you'll know exactly where my strike location is based on if I say a strangle or selling a put spread, something like that, or puts. So keep that in mind. If it's a little bit outside of that or a little bit more wanky, then I'll tweet out what the strikes are. All right, that's all I got for you guys today. Other than Friday's webinar is going to be on the call diagonal. It's really great, especially because earnings are starting to wrap up here. We're getting a little bit thin on some of those earnings trades. It'll be a good time to start setting ourselves up for implied volatility expansion, because remember, after these earnings, we get that vol crush, and then heading into earnings, we get vol expansion. So we'll be taking advantage of that. We'll exploit some of the volatility in the front month and in the back month, and I'll show you how to do that. So go to protraderstrategies.com, and if you can't take that, take it easy.